Okay. Let me find the question paper. So we'll be doing the second question of the e-tutor questions. Load it up now. There you go. Okay. There you go. Okay, let's try again. Share screen. Select a tab. There we go. I need this one. Can you guys see my screen?
It's still coming. Yeah. Thank you.
Loaded now? Not? Sorry, on my computer you can only share a tab at a time. So I'm hoping you guys can see something. Back. No. Sorry, did anything come up for you guys? Share again. Oh, okay. Thank you.
You can share again and let's see.
Okay.
Yeah, they were able to see your screen except myself. Maybe it's on my side.
Okay, let's try again. Just taking a moment. Again, I'm going to try again. It doesn't want to. Can we just cancel and start? Share screen under a tab. I am sharing a tab. There you go. Share. So you can see the Google, right? The thing is, when I go to the information, I don't think
they can see.
Can you see the question paper that I'm sharing or not? Was it still stuck on the Google?
We can see Google.
Oh, okay, that's the problem.
Yes, we can see Google.
It needs to share. Also, you guys are still on here. Okay, let's stop sharing this tab.
So while you're still trying to figure out the technical issues, you can continue trying to present. I'll open the mics at the meantime to ask students if they've got any questions that they need to ask as we are preparing for the assessment 4. So while I'm waiting for you, you can continue sharing. I will let you know once we can see.
Okay.
So do we have any questions? Yes. And Nhlanhla, you can unmute. Nhlalala, sorry.
Hi, ma'am.
Good day.
Yeah, I just wanted to ask with regards to the self-assessment that opens tomorrow, what's up with that? Do we have to complete that or
Yes, it's
what?
just to start. Yes, it's to prepare you for them. Yeah. Sorry.
And if we have to complete it, how many units? Is it like all the 17 units or just, I don't know.
Let me try to open it from my side. Let me see if it will open. So it's only 20 questions. And we remember study unit assessment 4 covers study unit 1 until study unit 17. So even the self-assessment will cover study unit 1 until study unit 16. So it's not very, very long questions. It's just to prepare you for the next assessment and also for the preceding assessment. Remember, some students will like to do elective assessment 5, 6, and 7. So as we do these classes, we are working towards completing the semester, preparing you for assessment 4, and also preparing you to write assessment 5, 6, and 7, which are optional. So
okay.
please complete it as you prepare for the assessment.
Okay, no problem.
Any more questions? Coco, are you winning?
I just need to change my privacy. There's one from Katiso.
No problem. Katiso, you can continue.
Yes, thank you. Good evening. Yeah, still on the self-assessment question, yeah, the self-assessment. Is it going to be open continuously, or is it going to be timed?
Okay, let me just check something. Just bear with me. I want to just verify that I'm on the system.
Yeah.
So it's timed for 2 hours.
Okay.
Yeah, and it will be open from tomorrow until the 13th. So it is like a practice, the same with the assessments. So you need to set aside 2 hours once you are ready.
And the number of attempts, I got the impression that we could do as many attempts as we want.
Yes, it's unlimited.
Okay, thank you.
Thank you. All the best.
Thank
Any
you.
more questions? Okay, the other thing I want to put it to you guys is that we have recreated the assessment 2 for those who were not sure, they've noticed some errors. We did check, and we always check when you send us an emails. So we have checked and recreated your questions to allow you so that you don't get disadvantaged. And as you know, assessment 3 is closing tonight. So if you haven't done assessment 3, please do it before 11 o'clock tonight. And yeah, and from tomorrow also we have another class as we prepare for assessment 6. Tomorrow's class, it will be presented by myself and my colleague Joseph, the lecturers. It is also called the facet class. So we'll be looking at the PPE tomorrow. So from 6 until 8 as well. So prepare for tomorrow and let your friends know, your fellow students, that we have classes. Yes, Google, we can see your screen. Do you have any questions before I close all the mics? Yes, we can see the question, Google. Okay, so I will close the mics and give the floor. I will disable all the mics. Okay, we've got.
I don't see any other hands.
Okay.
Okay.
All the best. All the best,
Okay.
Google. You
No
can
problem.
continue.
Cool. Okay, finally, sorry about that. Took a minute and a half. So we're doing study unit 17, which is the incomplete information. You might be naming it wrong. But basically how to prepare a set of financials based on incomplete information. So just as a summary, so you would generally have incomplete information because not everyone actually like prepares like how you've been taught now. Not everyone would prepare like a full set of financials for every transaction, like how you'd go use your cash payments journal and you do your general ledger, etc. In practice, for example, if you think of if you go to, for example, like a spaza shop and you go buy, I don't know, a maguinya or whatever it is that you're purchasing, the person at the window would take your R5 or however much it costs and maybe jot that down in a book, but they would only like be recording like the cash leg of those transactions, like they wouldn't go and do everything else. So that's how you would get to a scenario where you have incomplete record. So we'll be doing question 2 for today, which is this one. We'll go through the question and then we'll go through the answers. So Nehemiah is not here yet, so hopefully somebody else can tell me if there's hands or something that I won't be able to see those. Okay, so for question 2.
Yes, I'm here. I will assist you. Go.
No problem.
Yeah.
So question 2 starts as FTAR runs a small business, so called FTAR from home. So FTAR does not keep proper accounting records. He needs to calculate the entity's profit or loss and requested your assistance. And you have established the following. So this is a list of all the balances for 2005 and 2004. And then there's some additional information as well. So in a test environment, you would go and list these and say, okay, I know this is an asset, I know this is a liability, so that it's easier for whatever other questions that they come and ask you. But for now, we'll continue to the additional information, and they tell us that FTAR withdrew 20,000 during the 2005 year for his own use. So we know that's related to his capital or its drawings. It's going to be in drawing somewhere. Then during the 2005 financial year, FTAR deposited 30,000 from personal bank account into the business bank account. That's also something to do with capital and drawing. So he's giving money into the business. And then there's a note on the interest on the long-term loan for the 2005 financial year must be provided for. So interest is charged at 11% per annum on the outstanding amount as at 30%. So this requires a calculation, which you've got a long-term liability and you've got interest that will be required from it, and they tell you it's at 11%. And then if we move on to the required, so for question A, so they ask us to prepare the statement of financial position of FTAR as at 30 April 20.5. So you must be careful, it's for this year. And this is then your comparatives. So the statements must comply with the requirements of the International Financial Reporting Standards and appropriate to the business of the entity, and all calculations must be shown. So that's part A. And then part B, you must prepare the statement of assets and liabilities as at 30 April 2004. So this is the prior year assets and liabilities, and calculate the equity balance as at 30 April 2004. So this equity balance will be your closing for 2004, and it's going to be your opening balance for your 2005 books. And then the final question is calculate the profit or loss for the year ended 30 April 2005. So from the question, you can see they've given us all the balances. So there's some that you can plot, at least as a beginning. And then from there, you must add or subtract any of the additional information that they've added onto here. Okay, so moving on to, so I don't have it in Excel, apologies, because this was Nehemiah's part. So hopefully we can follow easily in the PDF. Okay, so question 2. We go to the solution. So that says A and B. Am I losing my mind? Oh, this is fortune. So still question 1. There you go. Okay, so hopefully I can.
Sorry, Coco.
Yeah, boy.
They said you are too fast. They are.
Oh, is
you
it?
are losing the students.
Oh, Shane, must I go back to the question?
Yeah, can you just go back because you have lost the students? Thank you.
No problem. Okay. So if we can just recap the question. So we've got this person who runs a small business from home, and he doesn't keep accurate accounting records. And so they require our assistance in preparing a set of financials based on the information that we have available. So from the question, they've given us some balances and some additional information. So from reading the question, hopefully I hadn't lost you there. From reading the questions, go to the question. So they want us to prepare a statement of financial position. So you know they're going to require assets and liability information. And then the following question as well, question B, is also assets and liabilities. So if you were in a test environment, I would start and say, okay, furniture at carrying value, is this an asset or a liability? So this is an asset. Or maybe before we go into each line item, maybe just like a recap of what is an asset and a liability. So for example, assets, so these are all your business resources, like your cash, your products, you can sell tools and equipment. So anything you use or own to actually create value or bring in value into your business. And then your liabilities are all your obligations. So everything you owe, like your loans, things that you need to pay to your suppliers. And then your equity is basically the capital or anything that you put into the business to actually start this business. So you would have, example, Mr. F. Tata would have put in, say, 50,000 of his own money to go buy, I don't know what he sells. Let's say he's a spaza shop, to go buy a deep freeze so he can put the ice creams in there. So that's money that he's given to the business, and that would be capital in your financial statements. So assets, liability, and equity. And if you remember the accounting equation as well, we go back, it's assets equals liability plus equity. We'll go back to this because this is also going to come up in the question, for one of the questions that we need to answer. So then you'd go through each line item and try a plot. This you can put like a little A for assets, L for liability. So furniture at carrying value. So this would be an asset because these are stuff that we use for economic value. We don't owe anything for this. And then tools as well. This is the tools that he uses for his business. So it's an asset to the business. He's got inventory. This is the stock that he would have in his business that he's selling. So it is an asset. He's got investment in shares. It's also an asset, would be in long-term asset. And then he's got bank accounts. He's got a favorable bank account, which means that's money in his account, like the money that he has. And then a bank overdraft is he owes the bank, he's used the bank's money, so that's money owed. So that would be a liability as an example. Then he's got a long-term loan. That would also be a liability because he needs to pay this back to whoever he loaned it from. Trade payables control. This would also be a liability because he obviously owes some creditors somewhere. And then he's got a credit card. Oh goodness, a credit card as well, which would be a liability because it's credit. The bank gives you credit, so you're using the bank's money instead of your own. So it's not an asset. Even you're going to have to pay back the credit card eventually. Then he's got 32 days notice deposit. So you put an A. This would be an asset because this is money that he's fixed somewhere for 32 days to whatever institution. And then prepaid expenses, if you remember from adjustments, study units, this would be an asset because we've paid for something that we haven't been given or used up as yet. So we've got one. So he has 1.8 asset at the moment. And then he's got accrued income. So there's money that he's waiting for that hasn't landed in his books as yet. So that's an asset that's going to come eventually once they eventually pay us. And then we've got income received in advance. That would be a liability because somebody has paid us early, even though we have not given them the service or given them the product, etc. So that's a liability because we'll have an obligation to return that money if we end up not giving him the product or the services. And then accrued expenses. Oh, sorry, yes, it's been a long day. And then accrued expenses, which be a liability because you haven't paid, you've used up the service, but then, for example, you haven't received the invoice in return to pay it. So you have an obligation to pay. If we use example, electricity as an example, you get your bill at the end of the month and you realize, no, Eskom hasn't charged you for the month, but you know you've used the electricity. So you would add that as an accrued expense in your book. So that's a liability that you have to pay. Yeah, I hope everyone's clear on that. So it's because it's not an Excel, we can't like mark it up. Hopefully everyone remembers what's assets and liabilities. But when we get to the question, then we can run through it properly. Okay, so if we go to the solution, so the first question, or just to recap again, so they give us additional information around he withdrew money, which means he took capital out of the business, And then he also deposited money, so he put money back into the business from his personal account. And then they also give us information on the long-term loan that he's got. This bad boy here. There's interest on it. So when you take out a loan, obviously the bank will add interest at whatever rate, so that you need to pay that back. So in this scenario, this is just the money that he owes, but we then need to calculate the additional interest that is going to be added on this that he owes at the end of 2005. They don't give us any other information about he's paid the loan or whatever amount. So you work with the amount that's given. As he didn't pay anything, he's just going to be adding interest onto his balance. And then the questions, if you recap the question, so the question A asks us to prepare a statement of financial position. So that's basically completing the equation. So we're going to have your assets, your liabilities, and your equity. So your balance sheet balances. We go back, and then question 2 asks us to prepare a statement of assets and liabilities as at 30 April. So the prior year, you're listing again your assets and your liabilities for the year. Oh, my children. Okay, and then the last question is calculate the profit or loss as at 2005. Okay, so hopefully everyone is clear on the question and the ask, and then we can go and slot through what they're trying to answer. We'll start with part A. Prepare the statement of financial position as at 2005. We go in here. Okay, so you'll draw up your skeleton of what a balance sheet or statement of financial position looks like. So it starts with your assets, your non-current assets, your current assets, and you get a total. And then your next block is your equity and liabilities. So you have your total equity, and you'll break down your liabilities between current and non-current. Hopefully everyone still remembers what's current and non-current on both sides, but we'll recap that as we go. So you've plotted your skeleton, and then you'll go back to your question. Okay, so for non-current assets, what in here is non-current assets? So your non-current assets, it's the assets that you're going to keep use for a longer period. For example, furniture, in his example. So furniture, let's say it's a room divider, for argument's sake, that lasts for a long time. So it'll be sitting there in his shop, and he puts his inventory in there, and that will last, say, like 10, I mean, judging by appearance, it could go on for like 20 odd years, where it's usable. So that is a non-current asset because we're going to use it for a long time. So then you would plot that into your skeleton. I've got non-current asset, it's PPE, and it's the 22,950. Then what else in here is a non-current? Sorry. When you go through and look, is there anything else in here that is a non-current asset? And yes, you've got tools. So similar to the furniture, tools is not something that you would just use within a 12-month period. You buy the tools and use the equipment for a long time. So you've got tools and equipment as your non-current asset as well at 46,350. And then you'll add that 46,350, and you plot that in, you sum it up and you plot that into your balance sheet. Okay, then this was a correction. It was the mix-up. Miss Clara, you can confirm if we reviewed this and we saw no, there's a naming convention correction here. So the next is what other non-current assets do you have? So if we go back to the question, he's got investment in shares. So usually investment in shares you would keep for a long period. So that's the 25,000. Sorry, we will slot it in there. It's just called the 32. The error in the solution is that they called it the 32-day notice, but just from the name, 32 days means it's current, as in you could access the funds within 32 days, so it's within 12 years. So this here is supposed to say the investment in shares for the 25,000, Everyone happy? Then we move on to current assets. So you go through your list and you see, okay, what of my assets would be current assets? So that's the one that we've just spoken about. You'd have your 32-day notice deposit, because that you would be able to access and use in a period of less than a year. Say you've got your 21,000 cash and cash equivalents, and then you would have, we're actually missing our bank account, sorry. I think that was the note we wanted to add with Eland. I'm talking rubbish. Sorry, 1 second. Meeting, sorry. Please close the door. Sorry, guys. Okay, so you would add your cash and cash equivalents as a current asset. That's the 21,000 rand for your 32-day notice deposit. You go back to your question of, is there anything else? And you've got your trade receivables. Sorry, maybe let's go top down so I'm not confusing you all the way. Then you've got your inventory. So he's got inventory of 10,500. There you go, that's a current asset, because hopefully he'll sell it within the year if he's a good businessman. So he plots his inventory there, 10,500, and then he's got trade and other receivables. So that is money that we are expecting to get. He's got so you've got your prepaid expense in there as a current asset. Sorry, my phone. And then you've got the 1,850. So this is prepaid expense as a trade and other receivable, and then accrued income as well, because they haven't paid us, but we know the money is coming. That's why it's a trade and other receivable or debtors. In other scenarios, when you add your 2430 and you sum it up, and then you've got your trade and other receivables. So then you've got your two totals, your non-current assets and your current asset totals, and that's your total assets. Then you'll move
Sorry,
on.
Ms. Kogo.
Yes.
Yeah, the students are a bit confused. They say 32 days notice was 25,000. I'm a bit confused because I saw 21,000 on the trial balance.
Yes.
So where did you get the 25th?
No, so that's why I was saying there's an error in the solution, because 32 days notice by nature is a current asset. So this is the investment in shares. That 25,000 should have said. So in here it should have been investment in shares, and this cash and cash equivalents is the 32-day notice of 21,000. This one. So just the names that are wrong. Is everyone clear? So in here, it says 32 days notice, but this should be investments, because the investments are non-current assets. And the 32 days, which is 21,000, is the current asset. It's accessible in less than a year. Is everyone clear? Is that okay? Sorry, I can't see notes or anything. Okay, I'm assuming everyone's fine. So it's just the solution had an error in the naming. Your 32-day notice is the 21,000. It is a current asset, and this here should be your investment in shares. Okay, so you total up your assets and you get 130 080, and then your if you remember from the beginning of your studies, your the accounting equation, your balance sheet needs to balance. So the total of my equity and liabilities needs to add up to 130,080 for my balance sheet to balance, and your statement of financial position to balance. Apologies, we still called it balance sheet in my time, for it to balance. Okay, so if we continue, so we'll skip capital for now, because if you remember from the question, in the list of items, they didn't tell us anything about capital other than for this year, withdrew money and he also added money in. So we don't know what the opening balance of the capital is at this present time. So we'll skip capital, and this will be our balancing figure once we've plotted all the information that we know. So from our question, we've got the assets and liability information, and so that we'll be able to plot, and then the balancing figure will be our capital for the period. Okay, so we'll start with your non-current liability. So this is your long-term borrowings. If you go back to the questions, so this would be your long-term your loan of 15,500. Correct. Oh, sorry. So this would be your long-term loan that he owes that's charged at 11% interest. And then your current liabilities, he'll need to add. You need to add all your remaining liabilities that you would have plotted. So we'll start with the easy one. So plotted your bank overdraft. So see, this is an overdraft is money that the bank has given you to use. Hence why it is a liability, and you would typically have to repay it within like a year's period. So that we plot in. Got our bank overdraft, and then we'll spend some time on our trade and other payables. So you would have plotted, and you know all the remaining liabilities, and those are the guys that you just stick in. So your trade and other payables will be your 9520. You go back, so you've added that. So that's my trade and other payables and creditors that I owe. Your credit card, because that you're also using the bank's money, so you have an obligation to repay that back, also typically within 12 or 24 month period. So you add that as a trade and other payable. They plotted your 5380. And then you've got your income received in advance. So they've paid you for services or a product that you have not given to them as yet. So you have an obligation to repay this back if you end up not giving the products or performing the service. So it's a liability for you. You owe them this money because you haven't done what you were supposed to do. So there you add your 3.8, and then you add and then the next one is your accrued expenses. So if we go back to the example that we had used of electricity, you know you've used your Eskom electricity for the month, but they just haven't billed you for that month. So you have a liability and obligation to pay Eskom whenever they finally add that bill, probably in the next month. So you add on your 1.6. And then the 1705, I don't have it. It's going to be so much easier if we had the Excel. Apologies. So the 1705 is then the calculation from here. Remember, they also said you owe 11%. You owe 11% of on your long-term loan. Let me start if I'm talking rubbish. Yeah, that's correct. So you would say 15,500. So your debt is 15,500, and you would times that by 11%, and you would get your 1705. So that's the interest that you owe on your long-term loan. And if you look at the information, nowhere does it say that you paid this interest. So for the purposes of this question, you assume that it's just going to be a debt that you owe and it's part of your current liabilities, because you have to service your interest regularly. Like you pay interest monthly. So that's why it's part of your current liabilities. So then just to recap then, so you've got your long-term borrowings, so that's your long-term loan, the 15,500. Then you've added all your income received in advance, your trade payables, your accrued expenses, and you've added the interest that you now owe on your long-term loan, and you get 22,500. We plotted the bank overdraft because we're using the bank's money. You add those in, and then then to get your capital, you would have said 130, which is my total assets, and my total equity and liabilities also need to add up to 130. So you'll minus the 15.5, you'll minus the 30, and then your capital would be the balancing figure to make your balance sheet balance. Is everyone clear on that part? Is there any questions? Let me go back. Oh, actually, no questions. Seems like everyone's fine. Happiness. Cool. So then that would be question A, which was create a statement of financial position as at 30 April. And you plotted all you would start, you would do your skeleton of a financial statement. You know, I've got assets, non-current and current. I've got equity and liabilities, non-current and current. And then you would go through your question and plot the names of the things that you know, and you add the sums up and you make sure that your balance sheet balances. So then if we move on to question 2, part B of this question, it says, okay, prepare the statement of assets and liabilities as at 30 April 2004 and calculate the equity balance as at 30 April 2004. So this is, careful, it's 2004, so it's asking us to prepare what we have done, what we have just done for 2005, we must do for 2004, but not in a financial statement of financial position template, in a statement of assets and liabilities, which basically you're listing your assets and your liabilities, and it's for 2004. Okay, we'll open Excel for this. Hopefully you can see the Excel. So this is the question. So question B, prepare the statement of assets and liabilities as at 30 April and calculate the equity balance. So they've given you the information for 2004. And then if you look at your additional information, there's nothing in here that relates to 2004. So all you have to do, which you basically would have done when you started the question, is list what are assets and liabilities. And we've just done that, so we know our furniture. So we will the financial position as at 30 April, then we'll start listing our assets. So we know furniture is an asset, and we know our tools and equipment is an asset, and we know inventory is an asset, and we know the bank balance is an asset. So this is, when it says favorable, it means it's not in credits, it's not in overdraft, so it's our money that we are using in the bank, so it's not the bank's money. And you plot that in 12,480, and you sum it up, and that's your total assets. And then you'll move on to listing your liabilities based on the information provided. So I've got long-term borrowing. So my loan was 9.
Sorry, Google.
Yes.
Can you zoom out? They're struggling to see.
Oh, sorry.
Thank you.
Oh, wait. I'm doing the opposite of what you asked. Let's do it this way. Okay. Better.
Can you scroll to the side? Yeah, it's better. Thank you. And someone is asking, can you explain the 1705 again?
Okay, let's go back. No problem. Okay, so the 1705 is part of here. So it's this additional information where they tell us that the interest on the long-term loan for 2005 financial year must be provided for. So provided for means we need to put it in our books. We haven't paid for it. It's due. And then interest is charged at 11% per annum on the outstanding amount as at 30 April. So they're telling us that whatever the loan balance is as at 30 April, we must times that by 11% to get what the interest that we need to provide for in our books. So it would be, if we were in practice, it would be an accrued expense as well. We need to pay this. So for example, in our scenario then, our long-term loan is the 15,500. Maybe let me get my, it's going to be so hard to find my calculator in this file, sorry. So how you get the 1705 is your balance as at the end of the year, 15,500, and you times that by 11%, and that will give you 1705. So that is the interest that you would have had to pay on this loan. That's how we get the 1705. That clear? Person happy? Sorry, I can't see. Hopefully it makes sense. Yeah, taking that as a yes. So we'll move on to part B of our question, where we are doing a statement of assets and liabilities for the question, and also calculating the equity balance as at 30 April. So we've just gone through listing all our assets and liabilities, which is looking at the balances in this column because it's for 2004. We've listed our furniture, 25,500. There it is. We've listed our tools and equipment, 51,500. There you are. And inventory as an asset as well. There you go. 15,200. And then our bank balance, which is favorable. So it's our money, not the bank's money, at 12,480. So that's lists off our assets. And then we sum those all up, and that gives us our total assets. So then the next part in our statement of assets and liabilities is to then list our liabilities. And then in there we have the long-term borrowing. So at the end of last year, it was at 19,000. We stick it in there. We've got long-term loans of 19,000. We know our trade payables is also a liability. Last year we had trade payables of 5,700. We add that in, and then we also had income received in advance of 5,000. So that's money that we should have, money that we received in advance of 5,000. And then we also have accrued expenses of 1,300. And we plot that in there, and then we sum it up, and that gives us the 31,000. So that's the first part of the question. We have to create our statement of assets and liabilities. Everyone happy there? And then the next part, it asks us, and calculate the equity balance as at 30 April. So similar to how we had to do for part A, we basically have to use the accounting equation to make sure that this balances, because you'll remember from our accounting equation, if we just recap that, so it's our assets equals our liabilities plus our owner's equity or equity. So if we're looking for what the equity balance is, we'll take this onto the other side as a minus, so it'll be assets minus liabilities, and that's the equation. And this is what we've done here, basically. So you move your liabilities over to the other side as a minus. So the equation to get your equity is assets minus liabilities, and we'll plot it. So it's assets. I have my assets as 104,680. This is what we calculated up here, where we listed all our assets. And we have our liabilities as 31,000. Back to our statement of assets and liabilities. This is everything that we have, all our liabilities that we've just plotted, and it gives us 31,000. And then per the equation, it's assets minus liability. So our equity is 73,680. So that's the second part of the question, where we calculate the equity. Everyone clear on there? Cool. I'm guessing that's a yes. And then the last part of the question is calculate the profit or loss for the year ended 30 April 2015. So if we just recap so this is 2005. So if we recap part A, what we did was we plotted all our assets and our liabilities, and we had equity as the balancing figure. Remember, equity is not just capital, so it'll be the capital that you've contributed. And so the initial capital that he would have put in, Mr. Tata would have put in 15,000 initially, and then anything else that he's contributed, like his drawings and his addition, any other capital that he's put into the business since it started, and then your retained earnings. So your retained earnings is basically the profit that you make each year. So each year that you make 1,000 rand, that will you'll do your income statement, statement of profits and loss, and he made, say for example, in 2003 he made 1,000 rand profit. That would at the end of the year would add into his equity as retained earnings. So that would grow each year with all the profit that you retain. And there, okay, so just a recap. So your shareholders' equity is, oh my goodness, sorry. So your this capital amount, because in our example that when we did it, we didn't have a breakdown. It was our balancing. So this is the amount from, so in here is shareholders' equity, everything that is contributed, and the profits and loss for the year. And the question asks us, calculate the profits and loss for the year. So it's somewhere lumped up in here. And the question is basically asking us to strip what this capital is made up of so that we can pinpoint what the profit for this year is. And this is what we're then going to do in the next question. So we start with capital at the end of the financial year. So this is what we calculated, the 84,075, our balancing figure. So we know the 2005 year in terms of capital will end at 84,075. And then the next part is capital at the beginning of the financial year. So this would be the closing for 2004, which we've just calculated in part B. So the second part of part B's question was calculating the equity. So this is the closing balance in capital, and this is the opening balance in 2005. So which means, so if we subtract the closing, the opening from the closing, we know that there's been a 10,395 movement this year in capital. Everyone with me there? This is the difference between the beginning of the year. The beginning of the year is this, and the end of the year. So we started at we finished 2004 at 73,680, which we calculated in part B, and then we ending the year at 84,075, which means we've increased our capital by 10,395. But this is still only the capital movement. So in here is also included here is then the movements in the drawings and whatever else that he would have done for the year. So we'll go back to our question where it tells us, okay, it tells us part 2, question 1, he withdrew 20,000 during the 2005 for his own use. So of this balance, so he took out 20,000 for his own use. That means it's money coming out. And then he also added 30,000. If you go back to the question, he deposited 30,000 from his personal bank account into the business account. So net, he added 30,000 and took away 20,000. So the capital increased by 10,000. Go back. This is not a thingy. So from here, we take away the additions and we add the drawings, and the difference is 395. So this might actually confuse you. Let's rather do it like this way. Now that I'm saying it, I can see how it could confuse everyone. So the difference between the two for the year is he put in 30,000 of his own money, and he took away 30,000 from the business. So the net is 10. So the net is 10. So what we're saying is, if we know for the year that the movement from the end of 2004 to 2005 was 10, and of that 10, it was the money coming in and out. So he put 10,000 in. So of this 10,395, 10,000 of it is purely just drawings. It's not profit and loss. It's money movement. So the difference between this 10, the 10,355 that we know is the full movement for the year, and the drawings. don't know what's wrong with my formula, but either way. So it's 10,000 minus the drawings movement. The profit for the year is only 395. And that's your answer then for part C. Is everyone clear there? Go in, sorry, I don't see any hands. Cool. And that would be the end of our question 2. Cool. So has anyone got questions? All clear? Okay, Waruna, I'll unmute you. I think you're unmuted. Disable. Oh, you can.
Hi.
Yes.
Please explain the capital part again.
Okay, no problem. Let's go back. Cool. This capital part. So equity as a whole, it's made up of capital, shareholders' equity, which is your initial contribution when you start your business, and any additions that you add. So for example, and then the profit that you would have made for the year. So for example, if we do a hypothetical, Mr. Tata, he put in 50,000 initially to start the business, and every year he probably puts in, say, 10,000 rand of his own money each year. This in all makes shareholders equity. Shareholders equity, and this is the additional capital contributions. So this was the initial one when he started the business, which would also be sometimes referred to as shareholders equity. So when he started the business, he started it with 50,000, and each year. Well, actually, let me not confuse you. Let's work with the example that we have. So at the end of the year, let's do it this way, because I'm just going to confuse you with hypotheticals, and we can at least pin it back to the same question. So for equity in the beginning of the year, we calculated in B that the total is 7,360. 7,3,680. So this is total. This in here includes whatever he would have contributed initially, the profit that he would have made for 2004, whatever he would have taken out or added back. This is our opening balance for 2004. This is our opening balance for 2005 for 20.5, which was our closing for 2004. And then in the year, it tells us that he withdrew 20,000 during the year. So he took out money from his shareholders' equity of 20,000. And then it also tells us that he also deposited 30,000 from his personal bank account into the business. So he put money back into the business. Put money back into the business, right? So that gives us that much. And then we know, am I talking rubbish? Yeah, wait, it's the other way. He withdrew. Yeah, should be like this. Liability. Am I talking rubbish here? He withdrew and he added, and he got a 6,380. And he ended up at, okay, just give me a moment to get my signage wrong. I might be. Okay, guy. Sorry, 1 second. My child is here. 1 second. Let me just get her up. Sorry about that. Question. Go back. Okay. I think I'm getting my signage wrong here, but let's continue. We'll fix it just now. So this is then the closing balance. The closing balance. Balance for 2025. And then somewhere in here, there's profit and loss. Yeah. Let's see. Profit's easier to, can we just get my sign wrong? My sign right. This is supposed to be. Oh, it is that. This is the one that's messing us up. There you go. We're right. 73680. Sorry, one sec. I'm confusing myself in this process. 8475 minus 30 and 20. Yeah, that's right. Minus 30 and 20. I started there. Yeah. There you go. Okay. So what I was saying is for the year, we ending off at 84,075, and we would have started the year at 73. So this is actually the signage here must be the same. Let's put that away. So that means our capital for the year grew by 10,395. But we know in here of this 10, the increase is a contribution from him. So it's capital contributions, the money that the net amount of what he put in. So he put in 30 and he took out 20. So overall, that means our capital for the year increased by 10,000. So we minus that off the capital amount, the movement for the year, and the difference we can attribute to it being the profit that he would have made for the year. I don't know if this makes it easier or has confused you more. But if we recap, we started the year at 7,360, and then from question part A, we're saying we're going to end the year 84,075, which means that our capital for the year from 2004 to 2005 increased by 10. And then from the question, 10 of that is not profit, it's just movement and drawings, where he put in 30 after he took away 20, so it's a net 10 increase. And then the difference between the two is then just the profit and is what we then assume to be the profit and loss for the year. Okay, hopefully that explains what I know.
Yes, thank you so much. I understand.
Okay, no problem. Karabo, go ahead. Sorry, if I mute, do I need to unmute you? Wait, must I disable my? Can you unmute yourself, Karabo?
Yes.
Okay, there you go. That's your question. Oh, must I allow mic? Maybe I've. Okay, try again. Sorry, I think I messed up there. What's your question?
Hello.
Hi.
My question is where they say that they withdrew 20,000 during the year for his own personal use.
Mm-hmm.
So when I saw that your drawings it's 20,000, are we not supposed to less the 20,000?
Yeah, we are. So the balance is the credit.
Only the 30,000. Like
No.
I don't understand them.
So if we look at the example this way, I need to, if you remember, your assets are positive. Let's go to which example? Okay, let's see. Okay, it's not showing up in this example, but in your balance sheet, your assets are positive, and then this leg is negative, so that your bank balances. So our opening balance is a credit of 73680, and then it says he withdrew 20,000. So of here he's taking away 20,000. So if we were to put it in credit, we would have been adding it in as a 90. So he takes 20,000 off, and he's now left with 53,680 in capital. And then he adds, and then he puts in 30,000 back, and then we get to the 83,680. Is that making sense? So the drawings do reduce your capital, the money coming out, and then the money coming in, because your balances and credits increases it.
Okay, thank you.
Happiness. Cool, that's good. I don't see any other hands. Cool. Was that us calling it a night? Everyone's clear? No other questions related to the module or this question? Okay, happiness. Cool then. That's the night. Thank you all. Oh, we've got an hour back of your time. Good luck with the assessment for those who haven't completed the assessment. Oh, no, it ended yesterday. Oh, there's a question. That's the TA. You can unmute, ne? What must I do? Sorry. Or was it a question? Not. It was just a hand. Okay, cool. Thanks. Thanks, everyone. Have a good evening. Cheers.
Thank you. Bye.
Cool.
Thank you. Good night.
Good night. Thank you, guys.
Good night.
Nighty night. Nighty night. Enjoy.
Nighty night.